Alrighty, we are officially live. Welcome in Sunday, September 14th, 2025. I'm your host, Gerardo G. and this is our Sunday study group session. Um, see what the market did for us last week, see what we can do next week, and speculate the analysis. Um, and as always, right, the calls are for educational purposes only. Any trade idea or speculation, it is just that. So please make sure that to take it that way, and we'll go on. All right, guys. Anybody had any questions or comments about this week that you guys had experienced or anything? Maybe we can open up the mic for that. Daniel, how you doing, man? Good to see you here, my co-host in action. Um,
Yeah,
welcome.
no, good. Monday was a great trade day for me. The rest of the week I was at more appointments than anything and didn't get into trade a lot. But however, one day paid for the rest of the week, so I was a happy camper.
There you go, Daniel. There you go. Good to see that. Anybody else? Comments, questions that come to mind? I know it's early. We probably still getting our coffee, and then our coffee kick in. But yeah, I mean, gold has definitely been bullish. It's trending up, but again, sometimes during when we see the trades, right, it's more of a bearish scenario. This view right here is the higher time frame candle view, the weekly and the 2 hour, excuse me, and the daily one. So I mean, even so, right here, right, it's just if we just focus on the day, we're kind of trading like the last third of it, right? The last third of each day, and it's New York time, right? If we don't trade London, so New York was a quick burst up and no trend continuation, right? No real trend continuation. Tuesday was kind of more of the sell. That candlestick there's the 9 o'clock, 7. Yeah, so that's the thing, right? It's like when I speculate, I try how I grade myself. I think I mentioned it before. Is I like to grade myself by trying to catch the biggest movement of New York, um, the biggest movement from New York every single day. Just gonna fix that for us. And you guys see here, right? New York. I need to show. Yes, fine. So this was okay. Yeah, Monday, Tuesday, Wednesday, Thursday, Friday. Now I got myself coordinated better. Okay, so Monday, I only trade New York mainly, simply because that's the time I'm live trading. So the biggest push was to the top side here, right? Even though buyers did step in here, the biggest move was to sell. Okay, now I'm starting to remember here. Like I think we were trying to buy somewhere around here. We could not get that nice pullback, and in the moment price made a higher high, the biggest move for New York was the sell. It was the sell down from that point onwards. I think Dulce caught a buy from there, took it about right here, and just let it go. I think we managed to sell a gift around this area, the 45-minute drop base drop. I think took the first one, and I took the second one to the downside, just to play that momentum. So this is Monday, it's Tuesday, this is Wednesday, and Wednesdays was a lot of pullback, but it was more sell than buy. If you guys see that, right? If we focus on Wednesday it only moved 219 pips, and there goes the start of New York. And the sellers, right, were dominant during most of the session, right? Because we ended up closing. This is the low and the high. This is the high of New York, and this is the low of New York. So that's the direction that we should have been trading that day. Thursday, right? Here goes the low, and here goes the high. It didn't make a high after the news came out, but it did end up finishing up today with that trend up. I think that was the 9/11, right? This was Thursday, 9/11, September 11th. Um, and then we just had one of the newses spiked us up, created that range of 302. And then from there, it just kind of hovered there. We were first looking for some sales around there, and it didn't work out, right? And I think we flipped it on a 5 minute rally based rally, or it was like three 15-minute candles. And then from there it established itself and then actually finished the day in Asia. These are the worst ones for me. We'll study here Thursday, okay? Any questions or comments on that, guys? If you have anything, please let me know. Donald, how's it going, man? Good to see you there. I know I still use a chart here, Donald. Just give me a minute, man. I've been a little busy moving, but we provide you guys the information there. But any other questions or comments here about this indicator? It's really, really important for you guys to do that, okay? This is more than Dr. Latrice. I'm just not your comment there. This three indicator view that I have of a template called HTF plus session, in my opinion, is very, very important, right? I combine three indicators. They're all free. You can find them all in the trading view. One is called HTF candles, right? HTF candle boxes for lower time frame charts by K Rolo. I have two of those, and then obviously the session indicator. FX market session by Boyd Twicking. There's many of this, but this is my favorite one because it has this this meter up there. So yeah, this view is one of my favorite views because I love the 4 hour chart. It lets you know how the weekly candlesticks look. On the 2 hour, I add in the days. And then on the 20 minute, I add in the sessions. Okay, well, they turn on. So it's a very, very important indicator to analyze. And just have a good eye for it because it keeps things, day by day, day by day. But yeah, Thursdays was very, very interesting. Just looking at Thursday by itself, um, you know, this previous day, this was Monday. Monday, Tuesday, yeah. This was Monday. Notice how price tried to, every time it came to a fib level of Monday, give or take, buyers stepped in. So let me go ahead and we'll focus just on this box here, okay, on Monday's price action. I'll go ahead and put a box over it representing the day. But yeah, before I get into that Thursday analysis, I do want to kind of us to review, what happened um, on the week before I erase this chart. So my speculation was it will come back to about 23% of the previous week, and we didn't, right? We literally had a very, very shallow pullback, and then price just took off. There was also a daily rally-based rally. Let's see how it reacted from it. There it is. Okay, perfect. Little pop quiz. So we were waiting for this pullback right here, right? But it didn't even reach the body of the daily rally-based rally. Just that, at a glance, what are some reasons why it did not reach down there? Anybody, want to throw a comment out there? Why did it not even reach the body of the rally-based rally? I'll give you guys 30 seconds. I sip of my coffee.
236 of that bullish candle, I guess, when it pulled back, if you feel that candle.
Okay, perfect. Good one. I think we're saying the same thing.
And pretty much just a continuation from the previous candlestick. Yeah, pretty much.
Perfect. And remember, guys, this is important. Why is this analysis that we're doing right now very important? Because the market is what? Starts the letter F. It's not
Fractal.
not a bad word.
Fractal.
It's there. It's fractal. And what does that mean? That it repeats itself over and over and over again in different scales, right? So if it repeats itself over and over again in different scales, the higher time frame candles are more consistent. They're more repetitive, right? And then we can try to repeat that movement in the lower time frame when things move a lot faster. But at the same time, going to a higher time frame can slow things down for us. It also as well, right? When you see a fast pullback on the 15-minute chart, when you go to a 4-hour candle, oh, it's just a quick pullback because the previous candle was 4-hour bullish, right? So yeah, let's measure right quick that candlestick, right? This price, this is actually Friday's price action, and we simply will just measure it low to high. And the question is, right, why didn't we not even come back and touch the wick of that candle? Well, the body, we didn't even touch the body, but we didn't touch the wick. So let's measure that candlestick then. And there it is. Good observation there. The actual bullish candle closed above the 23%. That's a strong close, right? It's a very, very strong close. Strong close. We got a little shallow pullback, right? Barely missed the 38% and then just took off. Just took off. Another thing that I would like to ask you before I actually go to the action, let me go ahead and answer the question as well. Can anybody see in there support and resistance with previous candlesticks? And if you see it, where's it at? There you go, Daniel. Right? This candlestick right here, this wick over here, very near, right? Very near that area. Very near. Okay. So that behaves. So again, right, this wick right here, as it made its high and it came down and bounced like this, that was resistance, right? Didn't sellers step in right there at that price level? Right? Seller stepped in, created some resistance. Okay. And then this Friday candle, what did it do? Broke the resistance on Friday. Then Monday, break and retest. Break and retest. And look at that, guys. See, just on daily candlesticks, we can do that. I'm just curious to see. Let's see how I look on the 15-minute chart. And there it is, guys. Okay. Impulse, correction, N wave, break, and retest.
So technically, actually, that Asian low became the support level. If you move your line to the bottom of that Asian level, you'll see it came right into that. Exactly. Yeah,
There it is.
pretty dang close.
Very, very close. And again, maybe this is the Saxo chart. The Oanda could be a little bit different, but I won't go there in this example. But yeah, to me, that's a very, very simple view of things. But again, right, how do you trade this? How do you enter this? Well, price when gold is very strong and bullish, or whichever direction, or has been more bullish than bearish, it kind of just holds between the 23 and 38%. Right. Once you see that low established, I mean, that's a buy and just hold into the negative 18 extension. And in this scenario, kind of went a little bit beyond. I think it went to the negative 16 extension. And then it held the zone right there. But that's how that worked. So let's just do the same exact analysis on Monday. Okay. We got another nice bullish close there. And there we are there. Okay. So same bullish scenario on Monday, right? It closed above the 23%. It actually spiked up very high, and the extensions would behave like resistance. And price came back down and closed right below 23%. And it kind of hovered there in those areas momentarily. This price action, this daily price action, actually reminds me of another price action that we've been reviewing on a bigger scale. Okay. Remember that April candlestick that we've been keeping our eye on for the almost the last 2-3 months? It was the lat control candlestick, and inside of it, it had quadruplets. This is very simple. Maybe this is very similar to that. Let me just let us go to that scale right quick and see, and there it is. Okay, there goes the last this candlestick right there, the April candlestick, right? 1, 2, 3, 4. 4 candlesticks before it made a new high. 1, 2, 3, 4. Very bullish fourth candle, and then the fifth one continued. The market is fractal, right? Let's see how that repeats. Could that repeat itself on a daily scale? Okay, 1, 2, 3, 4, and then could the next candlestick take us up, right? So those are the things that I just analyze to see how the price likes to move and so forth. So very, very important to understand how these candlesticks work. Alrighty, guys. So let's see. Questions or comments there? Feel free to chime in. Go down here on this time frame and we'll review Thursday's price action. Alrighty, Thursday's price action. Okay, let's delete it. Let me go ahead and measure this candlestick here. As this is Monday's candlestick, like so, right there. Okay, low to high of Monday is the only thing that's measured. All right, the first time we came down here, we probably went up first and then went back down. And then it touched the 38%, and then buyers stepped in. Came down, touched the 50%, and then the buyers stepped in, right? And now we're above that 23%. Could that level hold and take us bullish? Okay, can that level hold and take us bullish? Let's quickly go down to, let's say, a 4-hour chart. Let's see how that looks in the 4-hour. Get back my fib. So down here is Monday. Yeah, Monday's price action. Anything to the left that doesn't have the fib is the previous week. And there goes the story again, right? Had a nice impulse. Excuse me. Yeah, the impulse kind of stopped there at the 0, right? But when price came first touch the 38% level, we did get a buyer reaction, and then we had the sellers push us down. I think this is the area, correct me if I'm wrong, where Andres was kind of watching. Carol, good morning. The supply BEC, right? Right there. Nice little drop. Came back down to 50%, and then buyers stepped in again, right? And then who knows, right? I really do think this 23% level could hold, guys. Could hold. And we just continue going up. Continue going up, 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 and up. But let me check that up, Patrice. Also paying attention to that. Yeah, I mean, there you go. So I mean, again, yeah, patterns are definitely very important. This could be a harmonic that finished up, right? And that's the bullish push. Dr. Trees is showing that a W is forming, right? Maybe we can break above it, break and retest, and there it is. Okay. So that's definitely a possibility for us to have options. Rally-based rally right there. Okay. Rally-based rally right there. And check this out, guys. You see? Rally-based rally. It didn't come to the body, but it actually came in to the wick of the base. But now that you guys have your eyes trained, this resistance, it's also in due to this one, correct? That wick right there is creating that support resistance flip zone. That support is the flip. Let's see how it looks on the 8 hour just to see. And see on the 8 hour, there is no rally-based rally. But now you see this previous wick here, right? Oh, it's kind of getting in the way of things. All right. So good stuff to analyze. But yeah, let's go down to the 20-minute chart and let's quickly review the price action that happened right after that news. I think there was some news that came out, right? Right at 7:30-ish, and it created that nice impulse to the top side. Now here's kind of where, I get into second, adjust this fib. Right. All right. So again, right, this 50% level is the Monday's price action, correct? So price kind of wanted to get near it. It did that during New York. And this candlestick's at 7 o'clock. The news at 7:30. Let's go to a 15-minute chart. Yeah. Okay. This is good. So yeah, this is the 7:15 candle. And then here comes the 7:30 candle. Boom. Yeah, see that? Huge like wick there. Some people call it manipulation, liquidity grab. It probably is all that stuff, right? But again, though, the market is fractal. It repeats itself over and over and over again, right? So I try not to focus too much on too many complex things because then it gets complicated, right? Then it gets complicated.
Yeah. And that's why I always look at like 50 of the Asian session or previous session, and we've got a couple of drop-based drops in there, so a couple things like that.
Nice quick W. Yeah, it actually, Dr. Jesus, this W supported the push up. Now it just took forever to run up, but yeah, I personally sold from this area. I did get some pips down. All right, and then I think we try to sell again from there, and just didn't. It did not trend, right? It did not trend. It did not trend. But once that those positions got kind of stopped out, yeah. Sounds good, KG. Have a good one. Buenos días, por. So see, I sold from up there, and there it is, guys. Okay. Now here's one of the things, this week's lessons for me. Okay. Price has been flowing pretty well in our direction. Okay. A lot lately. But still very, very, very important to take profit, right? Especially at 90 pips. Especially at 90 pips. Maybe you can go break even at 90 pips with, excuse me, maybe you can go in your stop loss at 50 pips. Okay. Once you get to 90 pips in profit, maybe you can say, all right, you know what? I'm gonna go to profit, move my stop loss and 50 pips in profit. And then if it gets me out, it gets me out. All right. And we'll review that explanation here shortly. Okay. But again, though, right? It came in also. Okay, it touched around 50% of the Asian session, right? There you go, right? 50% of the Asian session. found resistance there. Also was a base drop that was able to bring that price down. All right, I'm going to take off indicators just so we can study the price action. And remember, this fib is from that Monday bullish candlestick. Okay, from that Monday bullish candlestick. So we're going to focus on we're going to keep that 23% level in mind. Just keep it there for references. So this was the big impulse news at 7:30. 7:30 a.m. Central Time. Right there. Okay, right there. I personally sold from up there. I think when price got in there, I got in and I could have put my stop loss at the wick and so forth. So let's just say I got in right there at where this candlestick closed. Short position from right there. Okay. And the stop loss was at the high. And I'm going to give myself a 90 pip stop loss. Excuse me, a 90 pip take profit. And that puts us, I'll put at 36.28. Okay. 36.28. Right there. Okay. One of the questions that I've been getting asked a lot in the Spanish sessions, right, in the COC community, is like, where's your stop loss? Okay. My stop loss is basically on my risk. Okay. Every time I get in the market, every time I get in, I'm expecting to be in blue almost right away. Okay. If I put my stop loss at the wick or at the high, etc., that may be over. And if I let myself get stopped out, that may be over, right? The amount of risk percentages that I have. So let's say I risk on every trade a 1% risk, right? 1% risk. And when I'm in there, whatever lot size I use, and if it starts getting very near that negative 1%, give or take around right here at that price level, or even just a little bit higher, what does that mean, right? If I'm very close to the threshold of my daily risk. Now it's up to me to say, okay, should I leave the position? Should I close it, and so forth, right? If I close it, I try to find an opportunity, right? So for my stop loss is basically when my account goes negative at the threshold that I set myself on a daily basis. Okay. And that's how I get myself out the market. Because sometimes, right, it's just too many pips to hold into drawdown. Right. I mean, this one was only 60, almost 70. Right. But here it is, guys. So see the importance of taking profit. Okay, the next candlestick does that, and the next candlestick I would have been out. Okay, the moment, how many pips was that? That was 90 pips. But I had a bigger target, right? I had a bigger target for it to continue to trend down all the way back to the low. That was kind of my speculation. I wanted to come back to the low. I thought we were going to go back to the 61% level of Monday's price action, right? So, here I could have moved my stop loss about 50 pips, right? Just as I told you guys. From the entry, 50 pips down was right there. Right at the 23% line. So let's say I put my stop loss at the 23% line. Let's see what happens next. Oops, I would have gone out. And I would have been out in 50 pips in profit, right? But I stayed in. And then that happened. Like, oh yes, right? And then that happened. Oh man. And this is where we were starting to sell. Right here. We were starting to sell from right here because we had that 15-minute base drop. Which was valid, correct? Which was valid. Let's see what happens from there. The momentum did not turn down. However, I think we got in. There was a nice little drop there on the 2-minute chart that gave us some pips here to there. But you see, I held this position, and next thing you know, I'm breaking even right here, guys. After being 90 pips in profit, after being 160 pips in profit. Instead of making money here, I didn't capitalize on anything. All right. So that's that story. Let's continue on. Remember I remember in the Telegram, we shared this. We saw these 3 15-minute candlesticks. All right. Well, I like that to the top side. You fib it, low to high. Right there. Nice 61% entry. I believe we had a 5-minute rally-based rally right there. So entry at 61%. Let's see where 90 pips is at. Long position ticks 900. That's 90 pips. There it is. Is everybody following along with the story that I'm trying to say? Right? Or just kind of what I'm trying to communicate. Based on the fib, where's our take profit at, guys? Based on the fib, where's the take profit at? There's
Zero or the extensions.
There you go.
The extensions.
Yep. Zero
Zero
first.
extension. Mm-hmm.
Yeah. Zero first.
The extension.
And then the extensions next. Okay. And sometimes I get caught up that I want to take profit at the extensions. Sounds good, Amico. No problem. Right? But again, what pays us? Do the extensions pay us? Or the movement of pip, the multiplier, the movement of pips times the multiplier of your lot size. Right? The pips pays us, guys. Not the extensions. Let's see what happens here. I got in that trade, by the way. Look at that. That would hit perfect. And actually, no, let me backtrack. Apologies. That was the entry for this 15-minute price action. But I was measuring my take profit and my analysis based on this impulse right here. Okay, so let me measure that. There it is. So my take profit technically was this extension. Mozilla Hunter and I were kind of joking back and forth. I have a friend, right, that we call certain areas take profit. And like this is the greedy take profit. Right? The greedy take profit. But again, right, from here, guys, this was, I'm saying this with passion. I'm telling myself, this was 90 pips. That was 90 pips right there, and maybe a little bit more. I think we did reach it, Andres. We did reach it. We did reach it. But that was a $10 push, 100 pips. Remember, trading is about peace of mind. Okay, how are you going to find your peace of mind? Are you going to find your peace of mind of taking profit and walking away? Or are you going to find your peace of mind and like set it and forget it? Whatever it is, it's perfect. There's nothing wrong with it, right? As long as you can read the chart properly and don't say the word too much liquidity, I'm perfectly happy. Man, there's liquidity for everything. But there it is, guys. See, that would have been a great move to end the day. So remember, I did not capitalize here. I got in here and I wanted to take it to this level. So both of them kind of took me out in break even. Let's add some more candles. Look at that pullback. Oof. Look at that. Back to 23%. And then again, but here goes the thing, right? Let me add back the sessions to this chart. There you go, Dr. Latrice. That's when the money's back in there, right? So again, to see, we're very near. Let me hide the drawings. We're very near the New York session, right? I usually close my trades the last hour of gold because I just do not want to hold or have my phone, keep on my positions and monitor my positions. And there goes the day closes. And then Asia, the new Asian session, took us to TP. Oops, where's it at? Yep, there it is. So again, that's the original lesson today is that though, right? No matter where you enter, let it take profit at your goal, 30 pips, 50 pips, or 90 pips. Everything else from there is a bonus. Right? A bonus. Let's see how this ended up playing out. There you go. See. And then no. So on Thursday's price action, Sylvie, I ended up making no money because I was in a great position on the sell. I thought I was in the trend all the way down, broke even. I was able to flip it. I went for the buy to Dubai, and I wanted this extension up here of the bigger swing. I went to break even, took me out. I did, however, right. I wanted my money back, right? I wanted some money. So I think I sent you guys a message on my Thursday evening, right? Which was New Friday day. Like, hey guys, I think I see the big push up because I wanted this thing to finish, right? And then I ended up making a little bit of money back. Well, yeah, with these three bullish candles. Okay. And again, though, right? I mean, you can call that revenge trading. I didn't lose any money, but I can call back revenge trading. Like, hey, I didn't get myself paid on Thursday, so I gotta make sure I get a little bit of money back. That's when I think I messaged you guys when this candlestick closed. I was wrapping up my soccer training with the kids, and I think I entered on this wick, and then I finally took it up, right? But I kept that same target. I think it was 36.52 ish, right? Yeah, right at the extension there, and that one went pretty well to the top side. And then just the way the way Friday closed, it was just very very weird. Just did not want to trend up. But other than that, guys, yeah, I mean, that's a good experience. Something that I wrote in my trading journal. Take profits, take profit, take profit. You won't go broke taking profit, as I like to say. You will not go broke taking profits. Good session. What do you guys think?
Good stuff, G. What do we got coming up this week?
Let's go. Let's go for it. Let me finish my comments. Let's go ahead and still at the middle of the month there. It is my little guy's birthday. He turns 6 today. So September 14th, and then next weekend, I believe the 21st, my middle child's birthday. And she's a teenager. But she's been behaving like a teenager a lot sooner than my oldest one. And let's see, Andre. So often I am 2, 3. So Andres, yeah. But again, though, and again, it happens to me too, man. Um, what's that graph? Maybe you guys have it in handy. I can search for it right quick. What's that graph that does Oh, there you go, Dr. Latrice. Okay. See, I didn't know that, Dr. Cheese. But now you're in September at this time, baby. Okay, I know. I know. I got two kids, Dr. Latrice, that are born in those 14th and 21st. I know exactly how how these kids can be. They're feisty. Always finding a way to win. It's a good
You're
habit
talking
to
about the
have.
wave pattern or
Yeah, there's something like euphoria. What was it, guys? I think like euphoria. Like it's like a wave of emotions. Euphoria. Let's see if I can find it right quick on another page because I think it is important just to kind of close out the the comments that we had. Let's see, trading euphoria. Yeah.
oh, the trading cycle.
Yes, trading cycle. Yeah, a lot of people connected with like, the actual charts, but this is actually I was actually thinking about that. Um yes, this is a good one right here. And yeah, let me go ahead and open this tab somewhere else. Let's see. A lot of people are the first time I saw this type of graph, right? It was this one right here. This one right here. And I didn't understand it, right? Because it's like how can the market do that? This is the very first time I saw this graph like this. Okay, right there. Wall Street cheat sheet psychology of market cycle. And when you see market cycle, I'm thinking that's how the market moves, right? So the market moves. But in reality, this is kind of like the our psychology cycle when we're in profit and when we're not, right? So you enter a position, hope. You're in profit, you're optimism. Now that you're in belief, then you're thrilled, and then you're in euphoria stage, right? Where I'm a genius, we're all gonna be rich, right? Right. So this is the feeling or the psychology whenever we're in profit, guys. And then when you get that first pullback, okay. Gracias por. Ahí comparto la gráfica y está en YouTube, okay. When we're and let's say we entered right around here, okay. But again, this is every position, right? Every position that we enter. Not the market, not the actual market cycle, right? Because we can catch pips up and down. It's like when I couldn't connect this because like what if I sell here and I win here, right? That's not anxiety, that's not denial, that's not panic. I won. So to me, right, this is basically our each individual trade and its emotions attached to it, right?
So it's like when you're watching your trade on your MetaTrader 5 on your phone, it's in blue and all of a sudden it starts turning red.
Mm-hmm.
That's
Exactly.
yeah.
Yeah, so let's say we entered at this level right there, at that price level. Hope, you get all these feelings, you don't take profit, you get a pullback, push, you're complacent. Like I got my stop loss and break even. The market's not going to come down, etc. And then price does this pullback. Now you're anxious. And then it comes to this level. My investments are with great companies. They will come back, right? And then let's not even say you're in break even. Actually, no, let's say you are in break even. And then boom. And then what happens? You're in anger. And then you're depressed. Right. And so on and so forth. So I literally was thinking about this the other day. And I'm glad we connected it together. Right. This is the cycle of our emotions when we're in take profit. So long story short, guys, whenever we're in euphoria, what should we do? TP.
Big profit. Yep.
Get out. Every time we feel that we're a genius, every time you hear my in live trading, every time you guys hear me, yeah, I need you guys to tell me, gee, you're a little too excited, man. Let's get out of it. Get out of there. But yeah, good way to close off that section right there. Good way to close it. I think it connected it very, very well. Okay. Very, very well. And that's how it was that Thursday. I'm like, oh heck yeah, it's gonna be a great day. I was taking my screenshots and getting ready to post it on the gram. All right, let's go. Let's go ahead and focus moving forward, and we'll wrap it up here in 10 minutes, guys. A little bit earlier, right? A little bit earlier. We should do 8:30, but I'm still moving. All right, this is how the market closed on us. Protect the purse. This is the previous weekly candlestick. Okay, so let's go ahead and before we get started though, and we got 4 bullish weeks. 4 bullish weeks. Same area, Sylvie. We just bought a different house. Yeah, same area, like 2 miles from where I'm at right now. Yeah, I think it's like 2 miles, less than 5 miles. Yeah. So previous weekly high. Thank you. Previous weekly low. Alrighty. And that's how we got to do. The open's all the way down there, all the way down there. From this level, though, guys, I'm just gonna simply do a quick just explanation on the fib levels. You guys are trees. Okay. We always mainly talk about the retracement levels, right? Right here. These are the retracement. Oh, nice. And then what are these up here? These are the extensions, right? There's retracement levels, extension levels. However, guys, there's also extension levels below down here. Okay. There's extension levels below down there that the fib does like to use. And in this scenario, that's one of the retracement levels that I find very interesting. Okay. So the regular fib that I always use, -18, -272. And again, right, is inverse 1.272. You got that? Right? This is -272. My pleasure, Carol. And this is the inverse of -272, right? This is below the 1. This is usually where the stop losses get hit, correct? Below the 1. But if we look closer and we just fib this candlestick, roughly what level is this 1.272 based on the fib? The 23%. And there it is, guys. So it's like that question, right? What came first, the chicken or the egg? Did we grab a liquidity from here, or did we hit the 23%? You know, it's kind of both happening at the same time. I'd rather just focus on the most consistent thing, right? So that is there just because I know that information. But in reality, I prefer not to use it and just stick with the most consistent thing that if we grab this low from this week, it's just coming back to this level. And simultaneously, they're very near. Okay. So just FYI on that. Let's just kind of look at the high and the low the previous week. I'll go back to our regular top-down analysis. let's go to the 4-hour chart and we study the trend from there. Okay. So from there, so we have a nice impulse, a nice correction, and price looks like it's kind of, having, there's more trend to the down. There's an impulse up, but there's more of a trend to the downside. So could it try to complete this flag pattern?
Exactly.
Okay.
It's a flag pattern, yeah.
Or could it kind of find support there and break to the top side? That's what we're going to analyze. But yeah, this is a nice little flag pattern right there. Bullish flag pattern. Alrighty. That's kind of what I see as far as the technical analysis of that stuff. I mean, of this 4-hour price chart. But let's go ahead and put a fib on this. Low to high. There it is. Okay. And to me right here, I think we can start making a decision, right? Let me add some more levels of price action to this fib. Right there. Okay. So I'm making the line right at 23%. Previous week, 23%. Boom. So now we can start speculating, right? What's our speculation? If we get back above the 23% level, we can take it to the extension, correct? Or no, the zero first, right? The zero. And then we can see if we can take it to the extension. If the selling pressure comes in, okay, right? We'll come back and analyze the rally-based rally and stuff, but I can see it's coming back maybe to 61%. Okay. Actually, let me do this before we do that. Hold on. All right, let's take the last 3 weeks, guys. This little number, and this comes with the higher time frame candles, the indicator. This will give you the show high and low range in pips. Okay. There's something that I actually messaged this trader. So I like to indicate, like, hey man, do you think you can put this is before I knew how to code? Hey man, you think you can put a pip ranger above? And yeah, man, that's a good idea. He ended up putting that for me. And so these little numbers up here represent, okay, they represent the range in pips. So right, so the last 3 weeks, 102, 162, and 94. Give or take, what's the average of that, guys? I am getting my calculator. Last week was 94 plus 162 plus 102, 358 divided by 3, 119. Okay, 119. The average of the last 3 weeks has been 119. How about we put an average about 90 pips? How does that sound? 90 pips to the top side and 90 pips to the bottom side. So if this is the market closure, I'm going to go for 90 pips to the top side. Right there. What price level is that? 37.33. And we'll call this the weekly max. That's to the top side, right? So at this very same level where price closed, let me clone this. And then we'll put it to this side. Okay. And the weekly max is down here. Down here. We'll call that 33.52. Okay. So weekly max to the top side. We'll put that in blue. And then weekly max to the bottom side, which will put it at Wait, is that right? 33.52, yep. 30. Oh, wow, 30, that's a lot of pips. That's what I was getting confused. Perfect. Everybody good there? Everybody follow along what I just did? Everybody good? Everybody good?
Yeah,
Questions, comments?
pretty simple.
Pretty simple, right? Just math, right? Just math. Based on previous weeks, how far could price go? Okay. And there it is, guys. Okay. If gold wants to remain bullish and if we get above this 23%, his weekly max can be all the way up there, surpassing the usual take profits extensions. Look at that. Right at the negative 618. Coincidence? I believe not. Where is this line at right here, guys? Where's this line right here? I just did a average
236.
Jennifer. Basically it was like I did the average of these last three numbers. Thank you for that question, by the way. This was 94, 162, 102. Did the average of those three, and then just kind of rounded down just a little bit, right? Because we don't want to give it to the pip, because then you know how price likes to get there. So I just kind of gave it a 90 pip scenario. I think what was the average of this, guys? Like 113, right? Give or take.
119.
119.
Hmm.
All right. Well, so I just kind of went down to 90. So I gave myself like 20 pips or 20 or 200 pips cushion, just so it won't, you know, so we can secure it. Because if we can catch the entire move up, guys, like, oh, that's great. I mean, even from here, I mean, that's a 90 push. That's 900 pips for the week. That's a good week. And we only need 30 and 50 or 90, right? So just to give us some cushion. But yeah, and again, right? So Daniel, you were circling that previous week right there.
Yeah.
But again, Lord, before
That's
I
23% of the previous week.
we remember that fib that we measured like this with that extension to the downside. Look at that, guys. Come on. If I just take the previous weekly high of this one, that we never touched the 23%. So low, high. Come on, guys. This gets me excited, guys. I don't know about you guys, right? Everything
And
is
it's simple, which is
everything
nice.
is measured. Everything is measured. And it has to be measured, right? Most of you guys here, everybody here is entrepreneurs. We're all business people, right? We can't overextend too much. We can't go on vacation too much because things, when you're making the budget for your business, like everything is measured, right? You had a good month. Well, you want to make more, you gotta spend more. So everything in trading is also measured. Everything seeks equilibrium, everything seeks balance. And the fib, because it's a tool that it's kind of connected with everything, the percentage levels. It just makes sense to me. So again, let me ask you guys something here. There's Monday, Tuesday, Wednesday, Thursday, 5 days trading week, right? Oh yeah, well, I think we're in all-time high areas, Dr. Latrice. Let me just double check, right? Yeah, that's way like ultimate all-time highs. Yeah, yeah, yeah. Oh yeah, way up there. But check this out. I should check this out. What if we drop very, very fast on Monday? Right here. Fast, right? And then Tuesday, we drop one more time. Very, very fast. So this was Monday's push, and this was Tuesday push. And we're able to catch a few sells both days. So what's happening there? Correct. Why should Dr. G says, why look for a turnaround? Why should we look for a turnaround and not sell? Well, because we maxed out, correct? But again, though, the week's not over. There's still volume in the market. There's still Wednesday, there's still Thursday, and there's still Friday. Price can come back exactly where it came from. And it's still respecting, right? It's still respecting that 90 pip movement. 90, well, $90 or 900 pips. 900 pips down and 900 pips up. Yeah, see that, guys? And all you got to do is just trade with the momentum as it's going down and trade with the momentum as it's going back up. If this happens this week, that could be a very, very great September for sure. Very good September. If we can drop down very, very fast. Now, the same thing in reverse. If we go up very, very fast in these extensions, I don't think we can go all the way back down because everything is bullish, but I can see us coming back down to the zero. And we take most of it, just take a pullback back down. There's always options for us to trade. All right. So perfect. What goes up will retrace. I do like that. Like that. All right. Previous weekly high and low measured, 23% level fibbed. Weekly max. Okay. Let's go to the daily charts and see those lines will remain there. And let's see how we look here. Come on, guys. I don't make this thing up, guys. The rally-based rally that we've never touched is hanging out over here waiting for us. What did my old mentor used to say? How convenient. What would you say, Mr. Ron?
I say take it back up.
Yep. Again, I took the last three, Prachi, but we can take a little bit more. Just to kind of you can always take a little bit more, right? I'm here. I saw your name out here. Gonna type it down. Yeah, but 3 weeks, is a good average, and we're not overusing it too much, right? We're not maxing out. Yeah, so look at daily rally-based rally right at that. If we can come here, we feel this little imbalance there, guys. That's a good area to buy. All right, let's go to the 12-hour chart. 12-hour chart, we don't see much. Just nice bullish candlesticks there. 8-hour. I think we see it better on the 4. Let me just double check. So previous weekly low is very high to that there. So yeah, we are gonna find some resistance here because that's wait. Oh, that's the previous week. Yeah. So we are gonna find some resistance at the wick of here, right? Because also the 78% of the previous institutional level, right? But from the 4-hour, let's see how the Yolanda chart looks. Oh, my bad, Dan. Right there. Yeah, the Yolanda has a nice BC right there. Okay. The Yolanda chart actually looks much better. But we'll come back to it. I do want to finish this one up. Okay. Go ahead and mark what you're seeing, Dan. Sorry.
The
4-hour?
BC right there.
Perfect.
That 4-hour BC is right on the money.
All right, let me zoom in there, which is also the daily.
Mm-hmm.
And it's also BC. Nice little imbalance fill right there. I like it. All right. 2-hour. I also added a candle. I added a new template for me, guys. If you guys didn't know the ETM candlesticks, I made an update 2.1 a few weeks back. I added the zones on and off, I believe. That's what I added. And this basically gives you a zone on the ETM candles. I actually also added there's a I like the 4-hour and 1-hour fair value gaps, another indicator that I use. I won't go into detail on this one right now. But in the ETM candlesticks, right? You can, that's right. The update was to show the labels or not. See the labels. Is it an RBR? Is it a break of structure candle? So on and so forth. When you zoom out, you start getting really noisy. So I created an option to turn it off, but you still have the little triangles there. Show BC, show rally base rally, drop base drop, show break of structure candle. Now I have this on here, right? You can turn on a zone in it, right? So let me hide the drawings right quick. And those green zones, right? Those zones there are those ETM candles. Okay, and so now the coding has to match for us to, to complete to signal it, right? What's up, Tommy? I saw you calling me right here, man. I was gonna message you, but after the call. Glad you made it, brother. You're an hour late, but it's okay, man. Just messing with you. But yeah, it comes with those zones right there. Okay. So it's easier on the eye to find them. All right, guys. It's easier on the eye to find them. Then you can mark it up and so forth. But yeah. Okay. See, drop, base, drop. It marked the zone. It actually behaved like a flip zone. And there it goes. So this one, the coding has to be exact. This is a rally-based rally, but the coding did not pick it up as one. Maybe I think because the wick went too low from there, right? That's why they call it. But you guys know it is a rally-based rally, right? Oh, my pleasure, my pleasure. All right, so I am liking this one down here. We do gotta pass this one. Maybe behave like a flip zone. Nice little break of structure candle. This is it. I like this right here. It is not labeled it as one. But to me, right here, this is going to be the decision. So, right here, guys, this 2-hour one. Price level, we'll call it 36.30, 36.25. Go ahead, Dan.
I was saying I love it. At the 50, it's my entry zone.
Mm-hmm.
TP1, TP2, and stop loss somewhere down there.
To me, that's gonna be the decision zone here, guys. Okay. I think we do go to this 2-hour 36.30, 36.25. I think we are gonna get a buyer's reaction from there as well. But what's gonna stop it? 23%. And if we cannot get above that 23%, I think we break, retest, we go all the way down to the low. All right. There's a lot of good pips though, from 50% to 23%. It's 250 pips, 40 pips. But if we get back above the 23%, we'll do something like this. Boom. Just like that, guys. I don't know. September looks like a very, very clean month. I really enjoyed this analysis right here. Ideally, I prefer the sell first because I would love to see price come back to 33.52. Gold will give the impression if we get to 33, if we get to 35.52, excuse me, it's giving the impression that that gold is selling, right? And if it's giving the impression that gold is selling, everybody's gonna sell. And when everybody's selling, what do the big institutions do? They do the opposite of us, right? They buy. So with that story, when we get down to this level, 33.52-ish level, that's what I want to see. Okay. That's what I like to see. But I as a far right now, I would like to see us do that and then push up. Okay, guys, so I'm gonna share this chart with you all. We'll get this recording here done ASAP. Very, very happy with this weekly outlook. It was fun. I think we had a lot of confirmation moments. Like, okay, like now connection moments, right? A lot of connection moments. Close that. Even I was amazed myself when I made that weekly max targets, how the fib also connected there. And yes, and Nico, most important word from there is the process, right? The process. How to keep it at, because again, we do got to mark up that chart and map it out. Everything intraday is the momentum, but it can be always the same thing. But I am really liking this process that we've been doing recently. Previous weekly candlestick, I think we just added the maxes, fib it, and then from there we'll play day by day. We got our roadmap for the week. And I think it makes sense, right? It makes sense. It's a great analysis for long-term traders, a great analysis for intraday traders, and even great analysis there too for Dr. Patrice. 20 pip game. All right. We'll wrap it up, everybody. We're at 8:31. I should come back tomorrow, Monday, for Spanish trading. I'm not sure yet. It's just been the whole Wi-Fi thing. I still have my Wi-Fi, my current old place, so we'll see. We'll see. But any changes, just I'll make sure I communicate as soon as possible. The animal study group is tomorrow. If you guys want to join, who'll give it analysis there. Appreciate that. 9 p.m. Central Time. And we'll do that. Everybody have a great weekend. Appreciate the support. Appreciate us being here, helping each other. And let's have a great trading week. Have a good one, everybody. Bye now.